Hi, Bruno here. Welcome to Spainguru. Can we avoid Spanish taxes on income from the sale of our Australian house? Let's see the specific question. Feeling very stressed and welcome any advice. We are coming to live in Spain on a non-lucrative visa to live for a year or two to check we're happy there before we sell our house in Australia. After getting tax advice, we have been told that if we stay in Spain and then sell the Australian house, we would have to pay Spanish tax on all income from selling our house in Australia. It is not a capital gain, as we've lived in this house for years, but they are treating it as one. This seems so unfair to me. Is there any way around this? Any ideas? So are welcome. And let's see the answers of Spainguru community members. If you sold the house while you were an Australian tax resident, you shouldn't pay taxes in Spain. However, there are good deductions if you sold your home to buy another in Spain. There are some requirements to apply that. I'm a gestor administrativo in Spain and doing taxes for more than 22 years. So yes, it could be possible not to pay taxes in Australia and in Spain when selling your home property in Australia to buy a home in Spain. You could be a tax resident in both countries at the same time. In some cases, because tax year periods are different in each country, Spain uses a natural year, Australia starts it the 1st of July. Next one, we sold 2 houses in Australia whilst Spanish residents. We didn't owe any capital gains on them in Australia. Send the reasoning through to our accountant in Spain and all good. As you lived in the house except for a few years, your capital gains won't be much. If you do owe capital gains, then you pay it in Australia. In fact, they withhold tax from non-residents. The Spanish government will not ask for you to pay any if you paid it in Australia due to the double taxation treaty in place. I hope that makes sense. Next one. The best thing to do would be to speak with a Spanish-based lawyer. I can recommend you one used in similar issue. It may be as simple as making a declaration with modelo 720 to Hacienda, which is the model or the form that you use for Spanish authorities to declare your assets abroad outside of Spain. This is a form for declaring assets outside of Spain worth over 50,000 euros, so when you do use them as money, they don't start asking questions and then requesting payment or issuing a fine. And in fact, the limit to present this form is March 31st. So right now is March 6th, and well, there's only a few weeks left to present this form. Next one. There are some tricky ones that you have to be aware of when coming from Australia to Spain if you become a Spanish tax resident. 1. Nobody knows for sure how withdrawal from Australian super will be treated in Spain. Normally tax-free in Australia depending on amounts and age. In Spain, some would maintain that they are the same as Spanish pensions and taxable. Yes, I know, the tax has already been paid in Australia. Second, difference in the first financial years can be a challenge or opportunity, I guess. Spain uses calendar years, ends on the 31st of December, therefore fiscal periods overlap. The next one, third. Each region, except Andalusia, I think, has a wealth tax on worldwide assets with varying limits. And here at Spainguru, we have an article on wealth tax and a video, of course. You can find the link in the video description below. And if I remember, I will also link it here so you can click comfortably from your sofa. Next one, number 4. Australian CGT on main residence for foreign residents changed in 2020. Unless exempted, a foreign resident is subject to CGT or capital gain tax in Australia, even if it was your main residence for 20 years. Spanish tax takes into account the proceeds from the main residence to be applied to the purchase of another. You will need a Spanish tax expert to tell you if an Australian home could be considered main residence for Spanish tax purposes. I don't know. Many UK migrants have faced this issue, and the tax agents around the popular UK haunts, example given, Alicante, Costa del Sol, etc., would surely have an opinion. Obviously, you need sound advice, but it would be difficult to find. I have someone in Canberra who has helped. He is reasonable, but some big companies want a lot of money and they still don't really know. I'm not sure why. If you're not certain you will remain permanently in Spain, you want to sell your home so soon, maybe trying to time the market perhaps. I mean, the Australian rental market at the moment is very good for landlords. Perhaps you could go back in a couple of years for more than 183 days, enjoy some time with friends and family, reestablish Australian residency and sell then. Interesting advice. Next answer. Yes, you'd be up for full capital gains. It's ridiculous, but the house has to be sold and settled before you leave Australia. It's scary because the way the application windows work, you need to have sold up before you find out whether your visa application is successful. The alternative is to wait for visa approval, then sell, by 90 days to sell or settle the house and get to Spain. In case you haven't got that far, the 90-day clock starts the day your visa is approved. Would be equally scary. That said, ask a pro, because surely one day someone will realize how stupid that is. But it was certainly still the case for us as we went through the process at the end of last year. Next answer. You should not have to pay taxes on your capital gains in Spain if you pay them in Australia, as the capital gains paid there are the same. I work overseas but live in Spain, and whatever taxes I pay overseas is added in my tax declaration and is part of the tax paid. I never have to pay any tax in Spain because what I pay where I work is the same amount I have to pay in Spain. You need to speak to a good tax accountant that deals with overseas taxes. Whatever taxes you pay in another country gets added to taxes paid in the country you're doing your declaration. I work in Mali and I do my taxes in Spain. I pay 26% on my gross earnings in Mali, and my gross and tax is put on my declaration, which is worked out to what the tax systems is in Spain. So much earned, so much tax to pay. If I pay more tax than I have to pay, Spain will not refund me the extra I have paid. That is the only problem. You can see this is a very tricky situation. I highly recommend you go with professionals, so you can find here recommended tax advisors, tax experts recommended by Spainguru. You just go to the menu on top of spainguru.es, consultations, and here you can find tax experts. You can become part of a Spainguru community today. You can join our Facebook groups. The most important one is Spain Immigration and Residency Questions, Spainguru.es, with 17,000 members. And we also have a dedicated Facebook group for Spanish non-lucrative visa with nearly 2,000 members, and for the Spanish digital nomad visa with 1.2 thousand members. And if you need expert professional advice, you can just go to spainguru.es and go to the top menu. There you will find immigration experts, relocation agencies, tax advisors, sworn translators, and health insurances for applications of all the Spanish visas like non-lucrative visa, golden visa, student visa, digital nomad visa, also medical certificates and travel health insurances. Last but not least, I highly recommend you to join our weekly newsletter that we send every single Monday morning with tons of information, questions and answers, featured blog posts, featured news, and also videos from our YouTube channel. Thank you very much for watching.